As the 13th largest economy in the world and growing, Mexico has secured its place amongst the BRICS nations as an emerging market leader. Joining me in the studio today to discuss the future of the Mexican economy is trader Francisco Villalpando. Francisco, thank you very much for coming into the studio today.
Thank you for having me.
The Mexican economy closed 2011 with an annual growth rate of 3.9%, following a 2010 rate of 5%. That's pretty impressive figures for a post-recession economy. Can you discuss with us the turnaround in the Mexican economy?
I believe the main difference now is that Mexico learned a lot of lessons from the 1995 crisis. A lot of wheels were set in motion that made the economy stronger, more resilient to possible crisis. And I think now we've gotten an example about how much more mature the economy is in dealing with these crises. You could say monetarily, the current governor of the Banco de Mexico has done an extraordinary job. And we also have a different Mexican consumer now, one that is less panicked, one that is more, let's say, ready to take on the hardship and to make the best out of it while keeping a cold head.
Have we seen a change in investors' attitudes towards Mexico as an investment opportunity?
Yes. Personally, I've seen how investors are much more, you would say, bullish about Mexico. They are now investing heavily in the country, both through their companies or through their wealth in the stock markets. But the difference is that this time around, they're not taking the money out of Mexico. They are weathering the storm, and they are confident that Mexico is pulling through. And I mean, you can see the growth rates. The big difference is Mexicans believe in Mexico this time.
Inflation has declined to 3.72% from 52% in 1995, when the peso's devaluation sparked capital outflows across the region. Can we expect this inflation to continue falling, and what impact will this have on the Mexican economy as a whole?
According to the governor of Banco de Mexico, inflation is what he said more or less under control. He believes with inflation levels as they currently are, he is willing to look towards probably decreasing the interest benchmark, which in turn would allow for longer-term planning in Mexico, longer-term investments, longer-term outlook, which is something that Mexico needs. Mexico needs to look into the long term. And that would create a stability and a platform for stronger growth and even more resilience in the future. And possibly to make it, let's say, lessen the gap with its Latin American competitor.
And despite all of these things moving in favor of the Mexican economy, Mexico's economy minister announced yesterday he's expressed his frustration over what he claims is US hesitation to include Mexico in the TransPacific Partnership. Why do you think that this is?
I think the delay by the Obama administration on that point could be due to the upcoming elections. They probably want to hold until this summer when the newly elected president will be decided. And that way it would be safer to conclude any further trade deals. I'm not sure they would be too willing to sign this with an outgoing president that's got less than 5 months in office.
Can we expect a big change in monetary policy come summer then when a new president has been elected?
I think that's one of the only things that should remain constant and get stronger. We still have a lot of reforms that have been stalled, you would say, by partisan quarrels. But I think the monetary is one thing that is completely or more or less out of any political change. I think it's safe to say that monetarily the transition would not be detrimental to the Mexican peso.
Francisco, thank you.
Thank you.
We'll be back shortly with more exclusive interviews. For now, though, goodbye.